Welcome to another edition of Crypto Buzz here on Kalkine TV. I'm Sage with you today. Hope your day's going well wherever you may be watching from. And Karl Marx said, when it comes time to hang the capitalists, they will sell us the rope. There is conjecture that Lenin also said something similar. So what has Karl Marx, the author of the Communist Manifesto, got to do with crypto? Well, it is purported that Karl Marx, the creator of socialism, would most probably support Bitcoin's existence due to its decentralised and democratic roots. However, many argue that Bitcoin is not socialist. What are your thoughts on the subject? Do share in the comments below the recording. However, if you are finding it difficult to take your eyes off the charts during this bear market, do think about listening to a podcast or using an AR meditation app, or do some gardening instead to clear the mind. Remember, well-rested eyes and a relaxed mind can be better to make financial decisions with. On-chain analysis company glassnode has revealed findings that the Bitcoin reserve risk indicator is at all-time lows. The result was reached after tracking market cycles and the risk-reward balance compared to the conviction of the long-term hodlers. It could be said that Bitcoin has not yet existed in a recession being defined by 2 consecutive quarters, proving negative growth figures such as GDP, which has recently been calculated in the United States of America. With the current levels of the Bitcoin Reserve Risk Indicator being below the 2015 and 2018 slumps in the crypto market, we have to ask, is Bitcoin at a capitulation event? Well, Bitcoin's price action has been sideways for several consecutive weeks. Its range hasn't decreased below $18,000, nor has it exceeded the $22,000 zone for little more than a few hours. And according to beingincrypto.com, a major capitulation event would lead to a sharp descent in the price of Bitcoin to close to $12,000, which would be equal to a 82% or more sell-off. This is more closely aligned to the drawdowns in the previously mentioned bear markets of 2015 or 2018. So how much longer will the sideways price action continue, and what trigger is needed to see Bitcoin break out over the $22,000 level mark, which it did do last week, but to actually stay there? These are the questions in the minds of most crypto enthusiasts at the moment. The price of Bitcoin is down 2.8% approximately in the last 24 hours, sitting at close to $19,932. During the Asian mid-session, this data was relevant. It's about 70% down from its all-time high pegged in November 2021 of close to $69,000, according to CoinGecko. And please remember, any information presented in this report is for informational purposes only and is not financial advice in any way. At present, Bitcoin processes about 7 transactions per second. In comparison, Visa cards do about 1,700 transactions per second on average. Lightning Network is layer 2 technology being built on Bitcoin, and this is helping to scale Bitcoin to process more transactions per second and to aid mass adoption. However, we are seeing that crypto credit card holders are on the uptick, according to a recent report whose data shows that crypto credit cards are in favour for their incentives in crypto rewards over the traditional cards. Some popular examples include Crypto.com's Visa and BlockFi's Visa card. Sydney's Immutable will also be partnering with MasterCard to launch a credit card to purchase NFTs shortly. But with the mass adoption of crypto comes more regulation. Even in South America, where tens of millions of Chivo wallets have been downloaded for the locals in the last year and payment by Bitcoin is incentivised, the user experience is still clunky and the infrastructure is in some ways limiting and prone to exploits, it was reported by Voice Crypto. Which reminds me that we are still in the phase of early adoption. Internet connection and speeds have only just reached the levels we are at now about 8 to 10 years ago, and crypto adoption is at close to 20% in the United States, however significantly lower overseas. It is expected that a big spike in adoption is still in the future, with crypto adoption closely tracking the rate of internet adoption in the late 1990s. Now, news from the regulators. This week presents Federal Reserve Vice Chairwoman Lael Brainard calling out to policymakers to increase scrutiny on the regulations imposed on the crypto sector. Her speech last Friday may have been overshadowed by the parliamentary meltdown which saw over 40 Tory UK MPs, including Prime Minister Boris Johnson, resigning from their positions in the British House of Commons. However, the shockwaves have still caused more investigation into the instability of some crypto platforms that could be turning to unorthodox means to maintain liquidity, falling prey to risks including deleveraging, contagion and fire sales, which has been highlighted by some crypto firms ordering withdrawal freezes and bankruptcies. Brainard pointed out that as the traditional financial system is not heavily interconnected with the crypto market yet, there was no major systemic risk at bay. She did warn that stablecoin issuers should be investigated more closely though. And ever since May 2021, being last year, the crypto sector has been under the eye of the regulators, with headwinds causing the following major interventions in the sector. The federal banking agencies launched Crypto Sprint in August 2021, with the full agenda set for 2022. And November 2021 saw the President's Working Group of Financial Markets, or PWG, present a detailed report on risks associated with stablecoins. These included the risk of panic similar to that of bank run. And this led to new calls for regulations to limit stablecoins from the TradFi banks. More recently, in March 2022, an executive order issued by President Biden on digital assets, paying attention to the definition of security and broker and making note of the innovative potential of the technology associated with crypto, although making sure to emphasise the downfalls of the crypto sector, which has had to clear its name from its dark past, which involved failed black markets such as Silk Road, due to the anonymity of its peer-to-peer payment system. Well, we've now reached the time for a short break, but we'll be back right after this, so please stay with us.
Hi there, James Preston for Kalkine TV. Are you into gaming and virtual reality? Does AI and the endless possibilities it entails capture your interest? Or are you constantly trawling through the web to try and discover the latest updates and innovations in the tech space? Well, let us do the work for you. From the latest product launches to shocking affairs on the World Wide Web, exclusive interviews and information about the top companies like Apple and Google to brand new tech startups vying for your attention. Kalkine's Tech Beat has the latest in what matters in the world of technology. Join me every single Thursday on the Tech Beat, exclusive to Kalkine TV.
Welcome back. After the break, you're watching Crypto Buzz by Kalkine TV. My name's Sage. Solana has been weathering the crypto winter better than most altcoins until recently. Solana is now reportedly being sued by an investor who claims illegal means have been used to make profits by the platform. Mark Young is taking the matter to the California Federal Court, where Solana Labs co-founders Anatoly Yakovenko and Kyle Samani, as well as its ecosystem, which includes FalconX and Multicoin Capital Management, have impinged federal securities laws. The class action lawsuit has alleged the defendants have made illegal sales of Solana's native token SOL as securities without a registration statement, whilst promoting the alleged unregistered securities. The price of SOL is down 5.9% today, sitting at $33.64. Over the last 30 days, it is down as well, 0.6%, however, and over the last 12 months, it is up 4.6%, according to data from CoinGecko. If you are looking for themed crypto trades, the DeFi tokens have been doing well in relation to other altcoins over the last week. It was reported by Waste Crypto that about 20 crypto platforms that were previously on the Terra network have now moved over to the Polygon network. And Polygon came into the spotlight after announcing a partnership with social media platform Instagram to launch NFTs. The price of Polygon Matix token is up 4.4% over the last 24 hours, sitting at roughly $0.579246 US. Over the last 7 days, it's up 17.5%. And over the last year, it is down 44.6%, according to data from CoinGecko, being current at the time of writing this during the Asian mid-session. Celsius, the DeFi platform, is reportedly making amends to its bad debt, having repaid $20 million USDC to Aave, another DeFi platform. The crypto lending platform has also upgraded its lawyers to Kirkland & Ellis LLP as advisors on its restructure. This is the same law firm that filed for bankruptcy on behalf of Voyager Digital last week. They will take the place of Aiken Gump Strauss Auer and Feld LLP, who were Celsius's previous lawyers. And according to DeFi tracking platform Zepper, Celsius still has a long way to go to clear its debt with Aave, with Celsius still owing about $130 million in USDC and $82,500 in rent to Aave, along with a further $85.2 million in DAI to the Compound Protocol, with a total debt still owing of close to $215 million. And last week, the lending platform freed up more than $500 million in wrapped Bitcoin after repaying $41.2 million in debt to Maker Protocol on July 7th. Celsius token CEL is down today, 5.8%, sitting at close to 0.753656 US dollars. And over the last 30 days, it is up 93%. And over the last 12 months, it is down 87.8%, according to data from CoinGecko. Now, as we start to wind up the show, news from the meme coins. Shiba Inu has come into the spotlight with announcements of new projects. A new stablecoin called SHI, that's SHI, to support its upcoming metaverse project were the two big news bites that were released via a blog post from SHIB's lead developer, Shytoshi Kusama. In the famed tradition of trading and collecting themed cards, the ecosystem will also be releasing a new card game collectibles for use in its upcoming metaverse, touted to be called Shibarium. So along with the future stablecoin SHI that will be developed by a team of developers on the network Treat, a new reward token is also due to be released on the Shiba Inu ecosystem. Treat's main use will be to offer loyalty rewards for the SHIB community and provide stability for SHI, the new stablecoin. It will also have a purposeful role in the Shiba collectible card game currently in development as well. It was reported by beincrypto.com. So to finish up, the price of Shiba Inu is roughly at 0.00001039 US dollars, being down 5.8% in the last 24 hours. And over the last 12 months, Shiba is up 32.3% according to CoinGecko. So, and that was that. Thanks so much for your company joining us on this week's Crypto Buzz. Hope you found some value in that. Keep watching Kalkine TV for more of the market updates and expert talks. And the best way to get through a crypto winter is to keep building. If you're a developer, find ways to connect with protocols that you enjoy learning more about, and listen to podcasts and read as many white papers as you can. Till the next episode, stay apprised and invest wise with Kalkine Media.